Good evening, everyone. A record-breaking day on Wall Street, an exciting day all around. I'm Tyler Mathisen.
And I'm Sue Herrera, in tonight for Susie Garib on this record-breaking day on the street. That after the Federal Reserve said that basically it was no time to taper its bond-buying stimulus plans, not until there's more evidence of economic progress. That lifted the Dow and the S&P to new all-time highs, sent oil and gold prices soaring, and pushed bond yields and the U.S. dollar sharply lower. Take a look at this intraday move and how the Dow did a huge U-turn at exactly 2 p.m. Eastern Time. That's when the Fed announcement came out. At the end of a wild day, the Dow closed 147 points higher, closing at a new record of 15,677. The Nasdaq shot up 38 points, and the S&P surged 20 points, also ending at a new record close. Now, Steve Liesman has more on the Fed's surprise announcement, what's next for the central bank, and what it wants to see in the economy.
Ben Bernanke and the Federal Market Committee surprised markets in a big way today by not reducing the stimulus it's putting into the economy, maintaining its asset purchases at $85 billion, despite market expectations that it would begin reducing it today. The Federal Reserve Chairman in his press conference offered three reasons. First, the Fed doesn't have confidence in the improvement in the economy that it will last. Second, that financial conditions, the rise in interest rates, could hamper growth in the future. Finally, fiscal restraint, the idea that there could be a big debt ceiling debate, that there could be a potential government shutdown, spooked the Fed into thinking that now is not the time to reduce the stimulus to the economy. But it was clear in the press conference that the Fed chairman was very, very concerned about the rise in interest rates.
The other factor which was at play was an unwinding of excessively risky and leveraged positions in the markets, and insufficiencies of liquidity in some cases meant that those unwindings led to larger reactions in prices and rates than might otherwise have occurred.
All of this begs the question for investors and the nation about when the conditions will be right for the Federal Reserve to taper. It could be after the debt ceiling debate and the government shutdown is potentially avoided. But here's what he said when asked when he might indeed reduce the stimulus.
If the data confirm our basic outlook, if we gain more confidence in that outlook and we believe that the three-part test that I mentioned is indeed coming to pass, then we could move later this year. We could begin later this year.
Finally, I asked the Fed chairman about his plans, whether or not he quit or was he fired, and would he serve? And he said he would not answer that question, but he did suggest that we might get some information on his future plans soon. For Nightly Business Report, I'm Steve Liesman.